Hey there traders, thanks for joining me for this week's chart review of the major indices. This is where every trading week begins because we know this influences how individual stocks move. Now last week we had a bit of an interesting week. You'll recall that at the end of the prior week we were still kind of lifting off of short-term support. Monday we worked our way back up toward key resistance and promptly failed. We finished negative on the day. We saw a gap lower into Tuesday and really a trend day down on Tuesday. Minor rebound attempts on Wednesday and Thursday, which promptly failed as well on Friday. So we're still in a sell strength mode here for this market. And for the NASDAQ, it's pretty apparent here, even though generally we're still kind of caught in this big box pattern and this big rectangle or high trading range, whatever you want to call it, you got to take a little bit closer look here at what's really going on. This was the high right here at 36.94. We made an incremental lower high, which means it was just barely a lower high. That was at 36.91. Last week we made another lower high, 36.84, and then even on Thursday, if you want to even count that, you could count that as well, 36.35. So we've got some lower highs here in the very short term. We're seeing no heavy upside volume, so there's really no accumulation taking place. This is just simply a matter of some distribution taking place with every one of these bounces promptly being followed by selling, and that's just been really the mode that we've been in. Now the key level now to turn to is this one right here, and that is key support. It's 35.73. I've pointed it out a number of times, and we touched it to the number last week on Tuesday. That was the session low. We've got a minor bounce from there, and here we are now heading into this holiday shortened week, just a few points away from there. So this is the big level right here, 35.73. If we do get through those, or through that level I should say, then this gap right here to 35.20 becomes the next level to watch. That's the next level that's in play through 35.73 to the downside. So keep a very close eye on that. And again, you're not far here off the highs. I've been net short lately, and that's been helpful, but I'll tell you this, that if you feel like this may be the end of the run, and we're kind of getting some short-term signs here that maybe this minor pullback could become a little bit more ominous, given the fact that these short-term bounces are not holding, and now we're resting on key support, and that's just in the NASDAQ. We'll get to the other indices here in a moment, but if those are really prompting you to be a little bit more concerned here, we're not far from the highs at all. We could swiftly move lower, and this is still a good spot for raising cash if you haven't done so already, if you're a little bit concerned about what's maybe around the corner. So just be mindful of those key levels as we head into a new week. Here's the S&P 500, and we've got a little bit more pronounced downtrend in effect here. In fact, you could kind of almost channel it lower here, and there's still room here to bounce a little within the channel or to decline as well. I mean, that's a pretty sloppy channel, but interestingly last week this 1671 level, we came right back up to it. We got within 2 points of it on Monday, reversed lower on the day, and then followed through into Tuesday. Weak bounces on Wednesday and Thursday. Take a look at where these closes were on those bars. We closed kind of right near the middle of the session, which shows just weakness. And then Friday down a little bit more on some heavier volume. And again, take note of these volume bars lately. All the above average volume bars in the last few weeks have been on declines, and so price is moving lower. And for the S&P, we've got the low last week, 1627. That's right here, and then beneath that we've kind of just got this little congestion zone right in here. It's about 1612 to 1615. That's kind of the next little area I think is worth watching on the way down. And then beneath that is going to be right in here for the S&P, and that's going to be really about 1597. That was a key level on a few different occasions going back from April, late part of April, early May. We finally pushed through there. We came back and tested that here in early June. Spent a little time beneath it here, and then once we got north of it in the middle of the summer here, we continued higher for a little while, but now we're kind of still in correction mode here, and that certainly deserves respect. Let's take a look actually first at the Russell. And this index has also been creating some lower highs. We had 1063, you know, we got back below this 1056 area again. You know, last week we saw this index get up a little bit higher, you know, to this 1044 area, but you know, we're getting lower highs here for the Russell. We're getting lower lows as well. We had a solid breakdown on Friday, down 1.5%. Again, volume is not tracked for this index, but now we're back to test the major breakout level, which is 1008, and I've been pointing to that for quite some time now. So here we are. You know, we got within 1.5 points of that on Friday. Looks like we could easily break that here early this next week without much damage, but that's a major level. If we get through there, then this index really has no real nearby level to keep a close eye on. The next big level is, in terms of a lateral level, is going to be way down here around 954. And then one more index is the Dow. This is the index that Main Street is most comfortable with. Obviously, we're back below 15,000. As we head into a new week, we're back also below this 14,887. Okay, this was the big level that we slowed down at in April. We respected that as a high right there. Okay, that's right in here. And then we finally pushed through it. We came back down, and that same area served as some support until it was broken. We spent a little bit of time beneath it, got through it again, tested it from above, and that held once again. Tested it again here a couple of weeks ago, and it held. And now that we're through it, we've been unable to get back above it. So this is the big level, 14,887, and now we're beneath it. So this index has certainly come down considerably, but it still has room to go. In fact, the June low is right down here, and that's at 14,551, and that's certainly not out of the question. And then, of course, beneath that is going to be down here closer to 14,380, a level that we really looked at back in March and then you know, part of April. So you know, the Dow is still in correction mode, and this market in general is still in correction mode. It's time for continued caution. Obviously, the headlines out there cause plenty of concern, but let's just stay with the charts and let them be our guide. If you're looking for some trade ideas to add to your own, stop by thestockbandit.com. We offer a trial. You can check out the service without risk and just see if it's right for you. But thanks again for joining me for this video. I will have more for you soon, but until then, trade like a bandit.